my name's Adrian Float. I'm the managing director of Seralto Limited, and we call ourselves the feature-based payments company. And I suppose I often get asked what that means, but really it's as simple as this. We started and have a vision to transform the way in which companies trade, and we actually digitize their trading relationships in everything from when they raise that quote all the way through to payment. We've had that vision for an exceedingly long time, and I suppose in more recent times, we've really started to bring to life that digital journey more a grand way, might be the way to put it. It's been an incredible transformation in the past 12 months. And I suppose we now find ourselves right on the cusp of achieving many of our ambitions to really improve the way in which we deliver digital business processes to our customers, improve their core efficiencies, and ultimately help our businesses to get paid what they're owed faster. Next slide, please. So as I said before, for such a long period of time now, we've been executing a really clear plan, and we actually started some new recruits yesterday, and I thought it was amusing to reflect on a presentation I actually gave internally almost a year ago to today. And at that time, it was really important that everyone understood the importance of the agreements that we signed in December of last year, which really set the tone for us to become a business payment specialist. And we entered into the BPSP and BPA agreements, and they really started us down the commercialization of this track in a much more sophisticated and effective manner for us to grow. And we sort of kept building from there. So in February, we started physically commercializing that and announced that launch of that new BPA or aggregator style technology go live. And we kept moving forwards. In April, we announced the funding, if you like, of different kinds of cash flow products with our partner at that time, Invigo, which ultimately has culminated in us actually bringing them into the family. We also completed the acquisition in June of Appstablishment, which really lined us up as a, if you like, with all of our intellectual property in one shop. And that was a critical step in the transformations that we're now taking to become a genuine portfolio stock. I suppose you round that out with the last sort of 10 days or maybe 3 weeks, and we signed agreements with MasterCard and Fresh Supply Co. for them to actually bring business to us. And you look as Tim said, we've had some substantial capital growth. We've also delivered consistency in revenue growth. I think a few 100% in revenue growth this time last year to now, and we continue to. All of these ingredients have really been a set of foundations for us to continue to grow upon. And now, as we sit here in the September quarter and as we look forwards to Christmas, we're really focused on accelerating all aspects of the business as aggressively as is possible. Next slide, please. So looking, as I said, we're the only real player, and certainly in our discussions with our payments partners and other partners, what differentiates us is the depth of capability. And that depth of capability also speaks to the way in which we can layer on revenue. So from an application side, we're able to offer a business a genuine depth of capability to actually originate their transactions. So manage the physical creation of quotes and and invoices and purchase orders and all those sorts of building blocks which culminate in a payment. And against that backdrop, we're really using our software as a vending machine, if you like, for the ultimate payments transaction, or now our new non-bank lending capability that is within our shop. So when we look at that, we've got this end-to-end journey that of application, integration, payment service, and now finance. And when we look at that, what it means is that we're able to look at the ledger in a different way. We're able to innovate around both the transactional effectiveness of a business and its network, focus on enabling and knowing objectives with our customers as they trade with their customers. So the Spender platform in and of itself's got this baked in virality, which we're really just starting to see the impact of. So that baked in virality means it's like a structured referral process. And instead of, I suppose, needing to acquire customers one at a time, we're focusing in on grabbing a node, or if you like, a supplier of goods, and then working with them to digitize the way in which they trade with their customers. And then in turn, we repeat that process up and down. We take the customer's customer and then look again to how we can digitize that journey. Now, all this sort of breadth of capability really means that we're able to provide a turnkey solution that's got a compelling saving structure to our customer, but still a fantastic revenue opportunity for us. And we're forcing competitors that only do one thing to, for want of a better term, be left wanting, as we're able to say, okay, well, we can replace these three providers you've got with our solution. That replacement saves you money here, here, and here, and provides a harmonized opportunity for, if you like, less moving parts within the organization, less technical risk, and in some regards, a one throat to choke mentality. So we'll continue to focus on layering on those capabilities into the customer market and building out. And I think in the not too distant future, when we announce our last quarter results, it will have been well and truly in line with the expectations we set in market. Next slide. So this is a volume play, and those referral agreements with MasterCard and Fresh Supply, as well as those aggregator agreements, are a big part of achieving scale. So scale for us has now really got a number of components. It's got, if you like, merchant turnover. So how much money are our customers spending between themselves, if you like? And then secondarily, how much debt can we put into market and how much funding can we administer using our payments platform? And that is really all about unpacking, expanding terms of trade, if you like. So in some examples, we want to deliver solutions where we're allowing the COD customer to become the 30-day term customer. And in other scenarios where we're wanting to unlock the value of a receivable book and allow a business to request payment now for those funds. So all in all, when we look at how we're building volume, we see ourselves progressively unlocking channels. And at the moment, we've got really 4 key channels to speak of. So at the bottom end, we've got our SME channel, which is largely a software-driven acquisition. So we're doing as much as we can to allow the customer to self-fulfill their needs. And then moving along, we've got what we call our tech channel. And in that space there, we're providing, if you like, pay now and pay later capabilities into another software vendor. And that could be a vertically integrated marketplace where you've got a collection of buyers and sellers that normally trade on a COD basis. And we can offer them a capacity to add terms of trade that weren't previously there. Or it could be another software vendor that's just got a big receivables schedule or a big payables schedule, and they want to unlock the potential of that and monetize it. So that tech channel is moving along nicely. And then we've got our, if you like, our distributor and franchise channel. And again, we'll make some really, we've made some really positive headway in those segments in the last quarter with some key wins there. And we'll kind of unpack that But basically what we're doing there is unlocking that distributor or franchise group as a node, and then connecting in their franchisees as spokes or their trading partners as spokes, and creating an end-to-end digital experience across that network. And then finally, we've got this, what we call infrastructure payments, which is really about large volume transactions. There's definitely substantial opportunity, as we've talked about before, in the agri space, hence the partnerships that we've recently entered into. And those transactions in and of themselves utilize our payments infrastructure, but kind of on a set and forget sort of basis where there's just constant money flow. I'm guessing I'm at my 10-minute mark. I only have one more slide.
Happy if you finish up, Adrian. Keep going.
Yeah, so I think today we're about 180 mil market cap, 177 million market cap. We've had a 330 odd% growth in our revenue, Q3 to Q3. Cash receipts are up 25%. We've continued that momentum. And as I said, we've got a number of major markets where we're really focusing on acquiring dominant players in those spaces and then fanning out into the connected customer base to continue to grow revenue. And I'm guessing I should take some questions.
Thanks, Adrian. Lots of questions. Now, the obvious question is about the trading halt and the announcement this week, the first contracted revenues under the referral agreements with MasterCard and Fresh Supply. And you had some voluntary suspension and the extension of that suspension. Then the company basically announced that you don't have any material contracted revenues. Can you explain what happened?
I'll do my best. Well, basically in a nutshell, we obviously, if we teleport back, as I said before, we signed up some new partnership agreements with MasterCard and Fresh Supply. We'd obviously been working with those guys for some time now. It just didn't happen overnight. We signed some agreements with some customers. We felt that those agreements were requiring us to make a disclosure, so we requested the trading halt. After consultation with the ASX, we got it wrong, simple as that. So we felt we took a conservative approach, and I suppose the rest is history. Obviously, a lot of water went under the bridge in that 9-day odd period. And here we are now, back out trading, which was our top priority. I guess the good news out of that is, yes, we got customers. There's or any agreement, there's condition precedents that need to be met. And yeah, we've learned from the experience and update the market when there are no condition precedents in the way of those becoming material contracts.
Yeah, that was a question from a lot of people online at the moment. Now, can you talk about where your revenues are currently, and talk a little bit about the Invigo acquisition and what sort of revenues they brought to the company?
Yeah, look, Invigo is a bit of a 1 and 1 makes 55. So they definitely had straight out of the gate $200,000 in revenue per quarter. I think close to $1 million they did last year in revenue. However, that said, the potential for us to leverage each other's business and accelerate far more rapidly will, I think, become very obvious with the passage of time. It's, as I say, it's a fairly unique and novel area in which we're in. So if you look at businesses like Invigo, traditionally speaking, they've really struggled with the tech piece. So it's a very inefficient way in which those players have gone to market. And there's a lot of manual processing and those sorts of things. And what we tend to see is fintechs just develop one little tiny bit of possibility. Now, the key thing about any sort of trade finance, and the important thing to understand, and it's probably at the heart of our business plan, is that any business that trades with another party on terms that aren't COD or cash on order is trade financing. That's its definition. So our strategy is really clear. We go to a distributor, and we say, or a seller of goods, and we say, hey, you got a lot of debt on your balance sheet in the form of accounts receivable. If we can help move that from, if you like, your balance sheet liability to you've got cash, and then we can monetize out, and the customer's still got that same debt, but on terms that they can manage, we've got a really compelling offer. And unlike, your consumer-based buy now, pay laters, you've got the customer paying for that, not the supplier. So it's very attractive for the supplier to be able to roll that out, improve their own cash flow, but more importantly, we put a framework in place so that the debt's being managed and administered. So it's not a constant bun fight. So look, the acquisition was one that we felt was a very almost essential part of what we're doing to differentiate ourselves. So if you look at other payments competitors, they're actually providing the foundation technology to buy now, pay later vendors. And we went, well, you know what, we just want to do the whole lot. It's all well and good to do a part of it, but there's a lot more margin in controlling the whole value chain. And in some regards, taking some inspiration from players like Square or Apple, who, their focus and growth is to control every layer of their own value chain to market. And that's certainly what we're doing.
Now, I mean, that acquisition of Invergo, you paid $10 million for $1 million worth of revenue. And you've also had an acquisition in the past of Appstablishment. Now, you're a shareholder in both those companies, or were a shareholder of both those companies. How do you determine the valuation you pay for those businesses?
I was not a shareholder and definitely was not a shareholder in Invergo. So that's not correct. But in terms of Appstablishment, well, we had an independent expert write a valuation report. The report, I think at the time when the report was originally drafted, it pretty much matched our current market valuation. And we've obviously, the short answer is I had nothing to do with it. I guess that in a nutshell, I had nothing to do with determining value. I was completely removed from the process.
Sure. And there's just a question in terms of where will you be in the next 5 to 10 years here? We'll finish on that note, hey?
Well, look, I mean, our ambition is to change the way businesses trade. We're getting recognition with global players now, and we're taking big swings at the market. Our biggest problem is how we manage our own growth. And that's a really good problem to have. I reckon in the last few days, I've had more people say, this is a great problem to have. Nonetheless, it's a problem. And what I mean by that is, as we're entering these spaces, we're getting exposure to, opportunities far greater than what we've been dealing with in the past. And if you look at the Appstablishment journey, it's provided software that's managed, many billions of dollars per annum in transaction flow in the supply chain. We're now connecting that to the money flow as well. And, when you want to liquefy many billions of dollars, you need to be able to access that capital and administer that capital very effectively. And that's certainly a great problem to have, but nonetheless, a problem that will actually occupy the rest of my afternoon.
Adrian, thanks for your time. Have a nice weekend.
Thanks. Cheers, guys.
Okay, that's all we have time for. Next week, an EV battery special. Stay tuned. Watch out for the registration. It'll be available this weekend. Ciao.